which is fun.
Hello, welcome back to the ROI podcast. It's a rainy day here in Buenos Aires, and on a rainy Friday afternoon, after I've been to the library, nothing more I want to do than to talk to my mate Chappie about what's happening with the coal markets, the gas markets, the markets in general. I've just got back to civilization, and so he's going to catch me up to speed on everything that's been going on. Disclaimer: nothing that we say is advice. You've been warned, and we're going to get straight into it, mate. We were talking about the coal markets, and we were talking in particular about New Fortress Energy. You were mentioning cheap gas might be going to spoil the party for a few different commodities. Let's take it from there and talk thermal energy generation.
Yeah. So as I'm sure a lot of people have been who are paying attention to this, outside of the most recent blip in part due to Israel and Iran threatening to have a little throwdown in the
A
middle
little, a
of
little throwdown.
yeah, a little throwdown on the I guess it's the Euphrates, would be the river that's closest in between them. So yeah, and so that caused TTF to spike a little bit, but basically cheap gas is it's the widow, people call NG the Widowmaker trade.
Yeah.
Um and it is also going to be the Widowmaker for the things that are the substitutes for it. The easiest one, and this is, the case now, which is it's basically coal. So if you're talking about generating heat to make something go spinny spin, so to me, basically, like we look at seaborne thermal here, of course, um, which is its own sort of market in of itself. So you have domestic usage in certain geographic locations, and then you also have the seaborne markets, which of course is exports primarily from Australia and South Africa, and
Which we're talking purely electricity generation, thermal coal. That's
yeah,
where that's where things don't look so rosy. But if we take, so I've got Newcastle up here. So we've got rolling
yeah.
12. If we go back a
Mhm.
little bit, you can see this massive spike, which of course was on the back of not
And
so cheap
then yeah, and then
gas.
overlay TTF on top of
Yeah.
that. And you're gonna
So
see
that,
the exact pattern of they literally
which
trade
is
right off each other.
which
So
just if you're not familiar with the gas market, it's a real doozy. It's not a globalized market. We're talking TTF here. So here I've got
yeah,
TTF overlaid with Newcastle. So natural gas, European natural gas
yes,
prices, which of course are different to US prices. And we've got coal, thermal coal down the bottom. And you can see one moves and it makes the other move because
pretty
they're
much.
kind of interchangeable. Gas just requires a hell of a lot more infrastructure. And when the infrastructure,
Yeah,
let's say, goes boom, well, you get a price spike.
pretty much. I mean, because if you get a price spike, then you're gonna run your thermal coal assets harder.
Absolutely.
You might bring more boilers online, basically. But the different coal is a bit, it cannot really be spun up or spun down because you're going to be heat cycling that, which if you're because you're boiling. I mean, yeah, you're boiling water. And so you're doing it's not something that, in much the same way like nuclear power, um where it's best if you're just running it, basically. But if you're having to cycle it up and down, then you're putting like you're thermally stressing it, and you only have like so many thermal stress cycles before you have to do pretty major maintenance. Replacing boiler tubes, I mean, just things like that. Because metal expands, contracts, and eventually it's gonna crack. So, uh, so that there's that part of that. There's also the issue of, I mean, even if you are just the power utility itself, you're going to have environmental remediation issues. So you're going to have the fly ash pit. You're going to be paying money for that even after you stop generating power. So if you're not
Is
getting a
that just with the coal, or does that go for natural gas, or what's
well,
the
natural
difference?
gas is pretty much you're burning everything and it goes up in the atmosphere, and it's like so they call it cleaner, because it is, but you're not having any to deal with any sort of a waste fly ash product. In addition to the fact that you don't have to have massive amounts of scrubbers and all sorts of other stuff to take out the sulfur and
Yeah.
all the various other nasty things that we don't really want going up into the air. So
So let
it
me
doesn't
ask you
take a lot of
this,
convincing to shut
Chapman.
one of these things down, basically. But go
Well,
on.
let me ask you this. If natural gas is cleaner, if it's more efficient, if it's actually where we've made most of the reductions in emissions,
Correct.
why aren't we using natural gas, Chappie?
Well, we
Why aren't you
are.
why
We
aren't you running for senator and increasing the use of natural gas? What's going on?
so we are definitely using more natural gas. I mean, that is the
Sure.
prevailing trend. So, all right.
But in
In
comparison to the coal markets, I mean, we're going to add what, 1.2, 1.3 billion by the end of the decade, which is a phenomenal amount. Overall, that's mainly through China
in India.
and India. Whereas
Yeah.
if you look at, or last I looked, the a relative increase of the slice of that pie that will be taken up by more natural gas will increase the natural gas market by around about 50%. And yet you've got
Yeah.
all this coal, probably 100% increase, maybe more by the end of this decade. Who knows? Is it because coal is quicker, doesn't need as much infrastructure? You just throw it on a
Yeah.
barge and a dry bulk carrier, and away you go. What's going on?
Um, so it depends on on the markets, of course, and where and who you're talking about. So, for instance, the total coal generation in the United States is in March down uh, roughly 35%, basically year over year.
Hmm.
And to be fair, some people will point out and they'll say, well, that's because of the weather. Okay. It is partially due to the weather. However, its share of, if you were to take PJM, basically, which is a grid that encompasses Pennsylvania, West Virginia, the Virginias, Ohio, a little bit of Indiana, a little bit of Michigan, and a little bit of Kentucky. Um, then you would also find that the share of total generation for coal is also down 32%. Well, what's up? Well, natural gas is up by 5%. There's probably some renewables there that are up a bit. And in addition to that, the total share of like the difference in, let's just say so far we can go to April, which is not, obviously we're not out of April yet, but April, the total gigawatt hours so far that have been generated by gas is up uh, 1,712 gigawatt hours. For
But it's
coal,
in the US because the
this is in
US
the
has
US,
cheap natural gas.
correct. Um, and if you compare that to the coal generation in PJM, coal generation is down 1,170, 1,127 gigawatt hours. So if effectively gas has just completely replaced the coal. And because it's cheap, and
It
that's
makes
what's
sense.
happening. Yes. But even if you were to go to like Europe, you were go to even Germany, the kings of coal over there. March was, I mean, you were down 40% year over year in March. The same thing goes for Poland. Same thing goes for Czechia. These are the my primary places that still burn um, coal in Europe. Um, Japan is flat, basically. Korea is flat. Taiwan is flat. India is up, but India is also up not to the extent that it's actually replacing the total amount of generation that's being lost in, say, just the United States. So, because we're shutting down coal here at just a fairly staggering rate. Um, and so, for instance, you were to go, if I mean, if you were to do like year over year, India's up approximately 1,000, 100 terawatt hours. Whereas the United States is roughly speaking for coal, um, down. Oh God, let me make sure I'm doing the math here because, God bless it. 848 plus
And I'm gonna bring up the last 6 months.
157. So
150.
India is up 100 terawatt hours. We're down 157 terawatt hours of
Mhm.
coal generation. So
So even if
basically,
the Indians
yeah,
burn heap more coal, it's not going to cover the fact that in the US, you guys have got gas just coming out of the ground, ready to
yeah, pretty
use.
much. Yeah, yeah, yeah.
Yeah.
Yeah. Um, so if and in addition to that fact, this is where we get sort of into the coal equities.
Mhm. So
India is increasing their domestic production quite substantially. Because everybody has coal. If you're depending on the grade, everybody's got
I was
coal
just going to say,
pretty
yeah.
much. Well, not everybody, but they have it. So
It's like uranium. It's everywhere, but whether it's feasible to get it out of the ground and
correct. There
yeah.
you go. And it could be much more feasible for them to get it out of the ground versus having to ship it via seaborne. So there's that part of it. Um, so I mean, but the amount of, and this has happened before. I want to be very clear that
When
we
did it
have
happen before?
seen. So if you were to go back to, let's
Let's see
say,
if we can find it on the charts. The price will tell the story. Let's
well,
say.
you could see, yeah, if even if you might have to blow up Newcastle here a little bit, but if you were to go back to 2019, you're going to see a bit of a drop there. And there was also around 2015. This was when the you had a lot of quite a bit of thermal equities in the United States. That, oh yeah, you see that drop off right there,
Yeah.
right
Okay.
at the it's and it was literally right about this time. Um, and it just rolled over. And that's, kind of what happened because
And that
eventually,
was due to gas coal substitution again, like same thing.
um,
What happened?
yes, in some ways it is gas coal substitution. It's also it's coal fire phase outs. There's a whole host of reasons, but basically you can overlay nat gas, and you can overlay them with the coal equities. And if there is a huge disconnect right now between gas and the thermal equities.
The
Um,
thermal equities being who are the main players now? Peabody?
so well, you've got some that are thermal and metallurgical, of course. Metallurgical is doing fine, because there are still blast furnaces in the world, particularly in China and Japan, and there's some in the United States, of course. Um, but if you're looking at, and that's why most coal producers, if they have been somewhat intelligent, have pretty much just gone to met.
Yeah,
Um,
that's
I
been the
mean,
trend.
BTU is developing. The only thing that they're developing now, as far as assets go, is met assets. But their primary met assets are not going to be online until like 2026. So, there's that. And they also have some Powder River Basin stuff and some other things here and there. But so
So
you have your,
the
yeah,
point is, cheap gas ruins the party for most things, but
everybody. It
particularly
ruins the party.
particularly coal
It ruins
because
the party
they're
for.
so closely related. And if you see the blue line, the light blue line here, you
Mhm.
see that lead, it goes down 40 odd percent there. And then you see the yellow line, I'm being very crude with my terminology, but the
Which is
yellow line coming
TTF.
down, which is
Yeah,
TDF, and then you see the dark blue finally, which is Newcastle in this case, which
yeah,
represents coal.
yeah,
Which all makes sense because if you've got all this cheap gas, you're gonna switch and use that
yeah.
rather than use coal if gas is more expensive.
So, and thermal
So
coal prices have already rolled over. So, particularly spot prices in the United States have, at least. Seaborne thermal is still above 100. I believe it's at 130.
mhm,
I
mhm.
am of the opinion that it is a question of when, not if, seaborne thermal drops below $100 a ton again. I think it
Ooh,
will probably happen sometime this year.
ooh.
Um, Look, you've got Europe, you got the French nukes now that are just pumping out and they're working again. So their power markets have completely stabilized, really, in the grand scheme of
Japanese as
things.
well. Japanese restarts.
And you've got potentially for Japanese restarts, yes, but the thing is that this is all So you have some, if you're in Australia, you're probably going to be okay. But if you're exporting out of the United States, or even, I mean, I don't know what South Africa is going to be like. They might be able to, uh, and we haven't even gotten to Baltimore yet. So that's the other fun part, because there's two major coal export terminals in the United States, and that's Norfolk and Baltimore, right?
I
Well, I'm
see.
sure everybody has heard
Something
about this
like
thing called the Balt. Have you heard about the bridge in Baltimore?
it's something happened to a bridge.
Yeah. They are opening a channel, and it'll be open for like 5 days, but I don't think it's actually deep enough for a fully laden thermal carrier or bulk carrier to get out. I think it's just for the ships that are stuck there to get out. Um, because I think it's only 30 foot deep is the limit. And the draft on a fully laden bulk carrier, I believe, is going to be like 11. And that's 11 meters, excuse me. And that's
And
going to be like, yeah, so
so you can't load the thing.
you can't load the thing to full, which means it's like, well, okay, which means it's not really going to make sense to do the cargo there. Now you can ship it down to Norfolk, but yeah, there is sort of this question as to, I mean, maybe if you're shipping it down the Mississippi on a barge, but and if you've got rail terminal access into, and if you can get it into Norfolk, you might be okay. But I think it's going to be restrained, and it's probably going to be restrained for some time because we can't clear a bridge in the United States all that quickly because the Navy, as an aside, just doesn't do salvage anymore. They completely got rid of all their salvage fleet, and we don't really have big cranes that can lift up big giant sections. So it's all going to have to be done very, very slowly in smaller sections, like, maybe one-fifth the size of what, one of those larger cranes from Europe or China can do.
Is this why I'm
Uh,
hearing it's going to take 10 years to
oh
rebuild
God,
the?
yeah, yeah. It's going to take a year at least just to clear the damn channel.
Cool.
I mean,
So
uh,
that's legit then.
oh, totally. Yeah. I mean, I don't know how long traffic is probably going to be restrained out of Baltimore for quite some time. And the thing is that if you're like a console that does a 60% export business and you own the terminal in Baltimore, all right, so cool. You're probably going to be a little bit restrained there. So you could ship it down to Norfolk. All right, you ship it down to Norfolk, and you don't own that facility in Norfolk, so you're gonna have to pay a premium to use that facility. You're gonna have to pay a premium to ship it down there because longer transit times on the choo-choo train. And then in addition to that, Baltimore is gonna still want property taxes for the Baltimore terminal because they're not going to give that up. And you're still going to be paying depreciation and all that other stuff. So even the fact that you're on the east coast of the United States, which is way far away from where seaborne thermal is going to go, because again, Europe is declining quite substantially, so you have to ship it all the way to East Asia. Getting it through the canal in Panama, oh, that's fun. Cool. I guess we're
Yeah.
going around the Cape of Good Hope or whatever else.
You're
Um,
dodging Houthi missiles. Yeah.
yeah, or dodging Houthi missiles. So there's that there to be fair, coal exports are up in the United States. They are taking advantage of that higher thermal price, but um, you have
Yeah.
into that opposition to that, you have all of the thermal generation that's going down in the United States. You have coal fire stocks at thermal generation in the United States that is at record level days of burn. They are like they're at the power plants where they store the coal, everybody is full. Like we have never seen inventories this high. So something's going to have to give, and that's going to be prices. Now, there's a lot of people who will say, "Oh, well, we'll just make the utility. We'll just pay. This is all forward contracted." You know, okay.
Yeah,
There
but
are,
up to when? How long in advance? And
well,
how
yeah,
what are the
and even
contract?
if they're not one, they're almost all of them are going to have market price adjustments. And the other thing is like the utilities, because there's an excess of of gas generation. So gas can meet you can shut down all these coal fire plants, most of them, and gas can meet that demand for the most part. It's not totally one to one, but it's enough that basically they can go to them and say, well, fine, we'll just shut down the reactor. We're already planning on shutting this thing down in 3 years. Well, we'll just make it a year. Are you sure you don't want to give us a lower price and renegotiate? And they're going to have to,
Yeah.
because otherwise they have to shut the mine down, and they still have debts to pay. So they have paid off quite a bit of their the balance sheets on these coal equities are great, but
Now,
uh,
off the back of that two year
but
bumper season. Yeah.
exactly. But the problem is that also, put it this way, these are not like full port short opportunities, because there's things that could happen. They could still be able to meet the higher price for the forward contracts might hold in the United States for domestic usage, and they could somehow find a way to get it out onto Newcastle, onto that thermal market. Now they're going to have to take a discount, of course, because those are the longer transit times, particularly in the United States. Um, but I think they're going to have to be issuing guidance downs. Like in the past, when you see thermal generation drop this much in March, because this has happened before. Okay, so just bring this up here real quick, and we'll just share this screen. Oh wait, you've just never mind, you've disabled share screens. But I can just tell you the years. So in 2015 or 2019, excuse me, 2016, you saw a
You have
33.
finished.
Oh wait, thank you. I feel so honored. I feel so
No, it's an auto setting. It's annoying.
that.
Anyway,
So here you go. This is do you see this here? Uh
this is a Chapman XL for sure.
yes. So you've seen this before, all right? So you have the 2016, uh this is,
Beautiful.
and 15, this was sort of this was the harbinger of bad news here. Then you also had the drops in 2019 year over year that were quite substantial. You also notice in 2023 the drops were significant, but which means they sold less coal, but the prices were higher. And they were able to essentially make up for it, the lower amount of sales on the price.
Right.
This year, we're seeing once again, and this is year over year. So you're
I wanted to
33.
clarify. Yeah, I wanted to clarify that because it seems to me uh,
Well,
every
this is your
winter
total
in the southern
generation.
hemisphere. Yeah, sure.
So
But if you look at June, June is down year on year on year on year on year since the beginning of this spreadsheet, which
correct.
is, you
I
know,
mean, look, we were at 1,239,000 gigawatt hours every year in 2016. We were down to half that in 2023. The
mm,
amount of inventories that we have at reactors, or not, I'm so used to nuclear, at the coal generation at the thermal generation facilities, I'll just call them the coal boilers,
the plants.
the power plants, at the power
There
plants,
we go.
is for the amount of generating capacity is twice as high as it was in 2016.
Mm.
So again, I'm sort of just
It's in
like,
the
but these,
US, I
yeah,
presume,
and this
because
is the
Indonesia,
US,
Indonesia might be a little different, right?
correct.
Okay.
So yeah, and Indonesia is seeing a little bit of a bump. It's really the data that we have is that shows that India is going up substantially. But again, it's not necessarily making up for this. Now, we're mining less coal. Okay, cool. Um, this is where, it's like you play your equity. Like, which equities are vulnerable here, and it's primarily U.S. thermal plays. Um, and basically that's as far as I'm kind of willing to go now. Now the thing is that in the past, when you've seen all of this, the Met equities have sold off along with it. Now that could
Is
have
that just the dumb market
it could
or
be the dumb market. It could also be the fact that those equities that are now Met only also had thermal assets at the time.
yeah?
Um, So your profits may vary, I guess. Let's put it that way. In terms of like the breadth of what you'd want to do there. But it's it's not looking good for US thermal in particular.
Mm,
Um, just because there's the the prices are going to have to come down. There's just too much in inventory. There is, you now have the Baltimore issue, so getting it out of the country into the seaborne market is an open question right now as to how possible, how to what extent that could be done. You have Europe that is declining substantially in coal generation, so that leaves you with less of an so you're having to ship it further. So
mm.
if Newcastle
At a
drops
lower
below
price.
100,
Ooh,
which
that's
is very possible. Um, I mean, I think it's just a matter of, I mean, honestly, as TTF is going to continue to return to normal, because it's headed that direction, um, then you're going to see that eventually, and that's just it's honestly a matter of time. Now, what has happened in the past is it's usually been this quarter where, and I think it starts with the guide downs. So you're going to have a lot of them that are going to have to come out and say, okay, we're expecting to get a lower price, and we're probably going to be selling less this year because of
so who
natural
is
gas.
who is they? Let's
So you
do the
have
easy part first. Who are the losers? He mentioned
the big
console.
the biggest loser is probably going to be ARLP, or Alliance Resources,
Okay.
partners, because they are thermal, and they sell 80%, 85% of their thermal into the United States, or 15% export. Now
Yeah,
they could
no,
increase
no
it.
one
They
wants
could, yeah, so they could increase that export. Now console's about 50 is about 60%, a little over 60% export, but their primary export terminal is Baltimore. So
okay. So
yeah,
they've got to pay more to receive less in price.
pretty much. I mean, they were
And
already like realizing less. I mean, I think their realized price was something like what they were guiding for was something like in the 60s, and they're probably going to need to be guiding for something in the low 50s. I
yeah,
mean, they're
with
so
cost inflation for sure.
yeah.
And so, what about I throw some names at you? Peabody, Arch Resources mainly met, from my understanding.
Everybody hates Peabody already, so Jesus. Um,
Why does
I
everyone
mean,
hate Peabody? I mean,
uh, um, because
they're a
of
blend. They're a
the
blend. They're
well,
diversified.
yeah, but they also have they are heavily encumbered by the sureties related to the coal generation. I think it's actually all based on the Powder River Basin. It's all those assets out there that they have to basically pre-fund remediation,
Ooh,
and which is fun, yeah, thank you, federal government. And I think it's probably due because they're mining federal land. Um, and that's probably part of it. I mean, but basically that's I'm almost sort of at the mind. It's like, well, let's just get. They already get like the least amount for that. It's like the least profitable business for them anyway. It's just, can we just get rid of this? I don't know. I
sure.
mean,
And they've got a
somebody's disagree. People will disagree with me, but um, their Peabody has a future in Met,
yeah.
um, and so as long as Queensland doesn't fuck them too much. I'm sorry, I swear. Jesus.
Okay.
I'm
So
very
I'll
sorry. I'm just
yeah.
dropping.
The first,
I
the
know
first,
everybody,
the first,
everybody,
the first
everybody was.
episode ever when I was putting in the YouTube ad reviews is that's the first time I had to say no. Actually, I do have something to report, and they were fine with it. So I'm still here. We are. So yeah, no, yeah, I wouldn't.
Anyway,
Anyway,
um,
so you've got Peabody, you've got the rest are all like Whitehaven's now a Met company, so
yeah,
that they don't
yeah,
really care. Which pretty good results, mate. So people were wondering how they were going to go with the transition,
yeah.
and seems to be good. What about Glencore? No one's talking about Glencore.
Well,
Glencore's
Glencore has a whole bunch of like I mean, Glencore is they want. I think I agree with some people who have said that Glencore just wants to slowly but surely buy every coal mine in the world.
but that's not a bad idea.
I mean, it's not a bad idea, but they're sort of like the evil, they are kind of like the evil empire
They
of
are.
coal. I mean,
They're
and
pretty good at making money.
yeah, they're great at making money, absolutely. Um, but Glencore just cornering that market, it doesn't matter. It's like you're still going to have the natural gas. You have proliferation, you have more
Sure.
LNG coming online,
But they're getting
which
these
is
things 1 to 2 times cash flows. I mean, I suppose it depends on the coal price that you're using. It's
well, the thing
but
is that, coal equities in the past have been trading for 50 like 50% of free cash flow. Just like literally, like you would make your money in like a year or half a year
yeah,
back from just free cash flow. And we're not able, I mean, so again, these things can sell off and they will sell off with like bad news in a heartbeat because it's all retail investors now who don't necessarily, it's not necessarily a bad thing, but they're people that have, frankly, not a bad thing, but a shorter time horizon.
yeah.
They want money now. And so the last thing they ever want to hear is like, we're making less money or CapEx. Like, no. So they're warming up to like BTU and having more CapEx out there. But I mean, like BTU just cannot seem to get above. I mean, it's like it just the thing cannot
With
seem
the,
to stay above 25.
with the balance sheet that they have, but bear in mind, Elliott Management, major shareholder, they want out, and so I'm sure they've been providing
Elliot's
some.
out at this point. I mean,
They're all
they're
out.
yeah, pretty
They,
much. I
they've
think
they've
so.
surely they've had a hand in keeping that selling has kept somewhat of a ceiling on the stock price.
A bit potentially. The thing is that with, I mean, everybody's very, very sensitive to like, and the thing is that coal equities are not going to be kind of making the money that they were 2 years ago, but they're trading like they are in some
Yeah.
situations. So there is some. I don't think the decline in price that I do believe is coming is actually been priced in. Now, granted, yeah, is it ridiculous to say, okay, well, great, they maybe trade it 4 to 6 times forward? I mean, that depends,
Depends on your time frame, right?
yeah. Um, I mean, you have ARLP that has, I mean, they,
I don't care about them. I don't know
yeah.
anything about
Yeah, I mean,
it.
so they're primarily a thermal play in the United States, of course, and they're probably the most in trouble. Console would be shortly after that.
And
And
what
then
about
most,
some of the guys that were talking about Thungullah as this call option on higher prices down in South Africa? Did you see about that though? It's got like, I don't know, 3 or 4 years of reserves. And they said, oh,
three or
but
four
it,
years, three or
yeah,
four years, that's it. Like, okay. I mean,
yeah.
maybe that's not bad if you think about it as like maybe
They're
coal is
treating it as a call option for if we get another 20, what was it, 2022 when the
yeah, if that happens. But the thing is that that's going to be somewhat
like
difficult
this.
because you've got a lot of LNG, even with the pause in LNG exports. I
It's
mean,
too
the
much
stuff
risk anyway. Too
is,
much risk. Who
yeah,
wants to do that? Anyway.
there's there's a lot out there. And so not that, anybody seems to care. I mean, it's like, the whole like yeah, oh yeah, LNG is the future and all this stuff. Well, freaking LNG stocks called New Fortress Energy cannot even just seem to get off the floor. And I actually had someone just sent me a message saying like they capitulated. Like, and honestly, I could
No,
understand
what are they
why.
doing? I'm here. I've got my phone. I'm buying some stocks. I'm shorting some puts as we speak. Anyway, the point before we move on to New Fortress,
Yeah.
we got to talk about Petrobras too. Recent update.
Oh yeah. Everything's
Yeah,
fine with
yeah.
Petrobras. Isn't it? They're gonna pay the full dividend. Not even the 50% dividend. Apparently Lula's now said pay the full.
It was a little psyop, little a little Lula psyop. Anyway, we've got to talk about Met. So why is Met so strong if you've got a weak economic outlook? Met, steel blast furnace, right? So you need economic activity,
Yeah.
but Met's doing pretty well. And the Met coal stocks, they're all the rage now. What's going on?
So China is
What?
gonna it's sort of the same thing with the iron ore thesis. Like
That's
look,
another one that's been super resilient. in terms
Hmm.
of the
Well,
price.
except volley, which can't seem to get above, iron ore's up.
It's another
God
side
knows.
of.
Yeah, I know. It's look, I'm staying along there too. Okay. Um, but and any options I have is like in May and June, so who cares? Um, but yeah, another psyop. Tell me about it. Um, the
Okay, so
Chinese are
met.
not, the Chinese are not going to stop making steel. Okay. I mean, that's just
True.
they're communists, all right? They measure their gentleman bits in how much steel they've made. So, I mean, it's sort of I mean, look, there's a pattern in
We
port
built
side.
we built 12 cities this year. How many people live there?
Hmm.
No one. That's
No,
not the
yeah,
point.
exactly. But who cares? We're building those cities. So you could see this pattern in port side inventories in iron ore.
Mm.
And whenever the port side inventory is at its peak, you have a spot price that is low. But eventually port side inventories start rolling over. And guess what? The spot price doesn't stay low. It starts going back up. We went to repeat this cycle. I mean, it just happens over and over and over again. So there's just no indication there to me that the Chinese are ever going to stop making steel. You also have the fact that India's is going to be making more steel down there too because they're
But is that's
going
some
into
real infrastructure going on over there, right? 17 airports, stuff's happening in
yeah,
India.
and you need steel for all that. I mean, you got
Mm.
steel reinforced runways, you got steel in the buildings, you got steel everywhere.
Mm.
Um, so iron ore is going to remain resilient. You may not see the iron ore prices that you saw like in 2021 or 2022, somewhere around there. But I mean, you're going to see good iron ore prices, I think. I mean, it's not going below 80 or 90 or something like that.
Which tells
Crazy.
us got a decent safety net, let's call it,
Yeah.
for met coal.
I mean, look, eventually what's going to happen here is there's going to be start, they're going to start juicing the economy with infrastructure projects. And we're going to go into a commodity super cycle because they're not just going to, they printed money in COVID. Great. But you're now don't you couldn't do like infrastructure then because you had
Yeah.
everyone in
Everything shut
lockdown,
down.
right? So China's going to do like China's is going to increase they're going to slightly increase their consumer products that they have uh that they're doing there, and they're also going to do um I mean they're going to do what they've always done, which is just build stuff. Everybody's just going to start building stuff again. And um that's you know I don't there are some signs in the United States that we're headed for stagflation, but that's simply because we're just printing way too much damn money right now. And we're not
Yeah,
and the
that's
economy just can't
honestly
handle it. But
that's always been my take. It looks very much like the 70s to me,
the
with
problem the different
with the debt problem of the 40s, right? So
so the 70s, in my opinion, was primarily a problem because of the energy shocks. You
yes.
had and that is why you actually truly got the stagflation. I don't believe because energy now is so cheap and plentiful, particularly with gas. Even coal is somewhat cheap in grand scheme of things. Um, that you're not going to get that because again, it's so easy just start making stuff again. And any time there's any kind of like look, everybody just seems to sell oil, so oil's probably going to stay below $100 for whatever reason because everyone just seems to love to sell it below $100. Okay, okay, fine, whatever. It's like there
I
is
hope God,
like
I hope God is not listeing to our conversation.
no, I hope
But anyway,
not. So
um,
I hope not. I mean, look, I think I think oil. Everybody's happy at oil at 95. I'll put it that way.
oh,
$95 Brent. Everybody's happy at $95 Brent.
oh, oof, static.
So just go to $95 Brent. We're fine. Everything's cool.
Yeah, we'll do the central bank play with gold, but with oil. Let's do it.
Yeah, yeah. There you go.
Anyway, so
So
so meant to be good. Producers. Everyone's talking about, no, not everyone, but in talking about Warrior seems to have, if they can get this new asset online, probably doubling production 2 years from now. That's pretty good. And then we've got Whitehaven we've spoken about.
mhm.
Arch Resources, no one seems to want to talk about because everyone's too busy watching what AMR did. But Arch Resources have come out and said they're going to sort of follow the playbook and 100% of free cash flow will be returned to shareholders. I mean,
As long as they don't have thermal assets, they're probably going to be okay. Now, are they going to sell off a bit in the thermal in the thermal reckoning, as I'm calling it?
Would
Um, Probably, but
probably.
I think you will find that there is enough investor activity now in the coal space that there will be perhaps some discernment. But I would definitely say right now, if you have anything, if you're holding anything in thermal, you owe it to yourself to take whatever some profits you have and buy a little bit of protection there.
Mm,
It doesn't take a lot. It's not very expensive to just buy a put for December. Yeah, you're taking a little bit of profit, but you're also, if you think it's going to go up, fine, cool, it's going to continue to go up. But at this point, if you're not willing to sell the thermal assets, I would
buy some
really,
puts. And then
yes,
if you do get a sell off, you got a bit extra cash, you can average down.
exactly.
If that's
Yeah,
if
if you want to go that route,
yeah.
but to me,
What about just buying the steel makers?
okay,
Brazilian steel
so
makers have done
yeah,
nothing for me since I bought the bastards. But they don't seem a bad business. I mean, Jesus. And now their feedstock's a lot cheaper. They're trading
yeah,
on, I don't know. I bought them what,
Girdo or yeah, Gerdau or
3, 4 times cash flow. But
hmm
anyway, they take your interest.
I would probably buy a Brazilian steelmaker before I bought anything else. I mean, X is in the middle, US Steel is in the middle uh, just trying to decide whatever future it's going to have. Whether
Mm.
I doubt the merger is going to go through with Nippon, but and the price is now reflecting that. So, but I don't know if Glyphs is going to be able to get them either. I don't think US Steel
Yeah,
ever needed a buyer. But you have also saw, like you've had a little bit of a rollover here in Nucor. Um, you've also, I think, I mean, GGB is sort of the same thing with Vale. It just cannot seem to get off the damn floor. But then again, it's also pretty much I mean, GGB is right now pretty much at the bottom
yeah.
of a price that it has respected for, well, maybe not, or at least since 2022. I'll put it that way. So,
Probably,
but
yeah, probably the whole Brazilian
yeah,
negative
it's
sentiment. Let's put it that way.
yeah.
Yeah,
Um, so, there's that part of it. Um,
but yeah, who
yeah,
knows?
I think
Not that.
steel producers will do well in a commodity bull, but um it's timing that. And it just depends on your time horizon. Like if you think I mean right now what you're trading for, oh boy, like 4 or 5 times earnings. Well, if you
Yeah,
get in a commodity bull, earnings are going to go up.
yeah, that can
So
come
your
down
prices are going to
significantly.
ergo going to go up too. I mean, but
That's right. And
um
I still hold a little bit of the National Steel Company of Brazil. SID is the tickets company. I see they're
mm,
going now.
mm.
You're buying it at 1 times book value, and the cash
Well,
flow is obviously
they're all
yeah,
trading at like book value.
yeah.
It's without a doubt, it's just, they're just there are other parts. It's just there's a lot in the market that's just completely hated right now. Just
Indeed.
company that are despised.
And one of which is one of our favorites, which is New Fortress. Perfect segue. What's going on with New Fortress, Chappie?
So
Should I be worried?
no, I there's no indication whatsoever that, again, they made like the massive profits that they made in the fourth quarter without FLNG. And LNG is cheap right now, so they don't necessarily need to have like their own supply like tomorrow. Okay. So
That's true. Good
they
point.
have the terminals in operation in Brazil. Those are now they're feeding gas in. They're building a power plant in they've upsized the power plant. Everything is going to be great there. Puerto Rico is not the disaster that everybody thought it was going to be, where, because they're able to sell into Puerto Rico at a price adjusted to diesel. So they actually capture some of that generation premium
Exactly.
on they are selling into into Puerto Rico
Exactly.
at a premium. They're not just selling at like Henry Hub plus a fee. They're no, they get more than
That's what,
that.
yeah, you and I have
Um,
spoken about this quite a number of times before, in which it's not a gas company.
there are some people out there that just cannot get over the fact that West decided to pay himself a $3 dividend when he shouldn't have. Okay. And they're just like, if we bid the stock, he's just going to do it again or whatever else. I mean, okay.
Mm,
All that aside, um, FLNG is they are working at it. I mean, I'm now a ship watcher. They are down there working at just an absolutely feverish pace. There's always ships out there. They are, and again, I do have some confidence that that is probably going to be online soon. I hope. I really, really, really hope they have it online. Um, because it's possible they may not be able to announce it yet because they're so close to earnings, but it
mm,
could be operational. I mean, we're watching the laden conditions, and it's like once it ticks up to 4 point above 4 point or 9.4, it'd be like, oh God, if it's 4.6, 9.6, oh, this is great, fantastic. They're loading the thing up with 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 the cold stuff.
Well, let's
Um,
talk. So I'm looking at the guidance here for 2024, and this is analyst guidance, so it's all over the shop and changing. You've got EBITDA closer, but it is closer to what company guided because it's 2.4 billion for 2024. That's what we've got as a mid. And we've got an earnings guide at mid of $5, a high end of the range at 750. Um, which, if you look at the stock price currently as we speak,
is
$20.21. I mean,
it's trading at 6 times. It's trading like 6 times forward right
goodness me.
now.
And remember, for the love of God, this is not a gas producing company. It's an infrastructure company, kind of a transport company,
Hmm.
kind of
That works
a utility.
that sells basically into monopolized markets. They call them
All
franchises for a reason.
right.
Because nobody is going to come in there and undercut them because they can't. So
Exactly.
what they compete against is diesel. Okay. And
Yeah.
diesel is still somewhat expensive. I don't know if anybody's
It's
noticed.
yeah, and US diesel stocks are very, very low. Some of the lowest I've ever
Hmm.
seen. So if we think net income from year on year, so from last year they announced 600 million. This year estimated it's going to come in at 1.4 billion. So you've got more than 100% increase, and the stock
Hmm.
price going down, chappy. That's not supposed to happen, and yet it happens all the time if you're a commodities
Well,
investor.
you are apparently seeing some of the analysts who have raised the guidance what they expect
They
for
were
DAP.
way off. They had no idea. They were expecting
Well,
negative last
yeah, and they were expecting
negative.
like they were expecting something in the range of $2. They finally now raised it to 4.45,
Yeah,
according to our friends at TIKR. Um, but again, this is an infrastructure company. Infrastructure companies normally trade for like 20 times earnings, and this thing is trading for 6 times forward. It's
yeah,
like what
with
that,
massive
but
tailwinds to grow set.
I yeah, 5.4 times forward. Not even six. We're less than 5.5 times forward on this thing. Like, do you guys just it's does the market just hate this thing so much? It's like it's totally despised.
But
Um,
AI is the future, and it doesn't need energy at all. Doesn't need
oh
electricity.
yeah, oh no, totally. It doesn't
So,
need anything.
I mean, it's just incredible. Look where we were. When was this? December. December last year, we were
Hmm.
pushing $39, and you and I were chatting about it. We were all very happy. It was on the, I believe I sold and then got back in,
Yeah,
um, opportunity cost. And now I won't be
sure.
selling. I'll be continuing to add because I think this is $100 stock.
Yes. This is within 3 years, this is $100 stock.
What if
Goodness.
let's come back to the elephant in the room of the debt load on this company. So instead of Wes paying himself a dividend, Wes, if you're listening to this, we would prefer you just to improve the balance. Well, I would prefer you to improve the balance sheet a little bit so that we can
Yes,
get
they do need to
so
do.
we can get that multiple re-rating. That's what I
Yes.
want.
Well, and they want that multiple re-rate for a couple of reasons. One, it will expand the markets that they can operate in. because and that's what they really wanted, I believe. Um, because there's certain just places where they're just going to want a very high multiple for you to be there, I guess. Because I mean, look, people want to know that you're going to be a trust that you're a solvent business that's going to be able to provide the thing that you're saying you're going to provide, right?
Yeah.
Um,
Yeah. When it comes to the electricity grid of certain,
I mean,
well,
look,
of
I
it.
think if you were to compare the the debt load in comparison to the kinds of cash flow that this thing is going to be generating, um, you have, in my humble opinion, um, this is manageable. This isn't like, the end of the damn world. It is a
No,
capex heavy business. So yes,
it
you're going to
was.
have
It
a lot of debt.
was.
Well, it was, yes. And now you have assets that are now in operation. And the thing is that everybody just thinks that Puerto Rico was like this flash in the pan. I mean, like, oh yeah, they got rid of their LNG trader in London, and everyone was like, do I need to be worried about this? Like, this is fantastic news. Why do you need an LNG trader in London if you're not selling cargoes?
Don't know.
Because you're not selling the cargoes anymore, because you're feeding them into your high margin, vertically integrated system. Again, it's like, oh my God. And you could tell Wes's frustration on it. And I think it would be helpful if they were just a bit more honest on the FLNG timelines. And if they just
Yes.
came out and said, hey, we're not really, look, this is a first of a kind, and it's going to be the fastest thing if an LNG ever brought online, ever, anyway, no matter what happens. But we are building something out in the middle of the ocean. So cut us some slack. And also, LNG prices are really cheap right now. So it's not a big deal. For the moment, it isn't a
Mm.
big deal. And,
Also,
but
probably more transparency around what they're going to do with these cash flows. Because if they go and do silly things with it,
I mean, they're probably going to some of it's going to be deleveraging, I'm sure.
oh, I
Some of
hope.
it's going to be expansion, which could even be better. Um, I mean, as long as you're basically building, if you're, some of it's going to go to building the power plants in Brazil, of course. Some of it is,
Which is fine.
yeah, just, and there are other things that are on deck, of course. Um, I mean, Ireland doesn't seem to want them to build a terminal there, but I don't really care. I'm just
Why
like,
would you want to go there?
yeah, exactly.
Want
I
to do the
I do
million
not
limit
want.
thing
No,
again? I don't know.
I don't want European tax exposure. Go fuck
There
yourself.
there we
Sorry,
go.
second F bomb of the show. um, just so
No, 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 I agree 100% there.
I
No, I
look.
think
I think NFE is a show me story. It's a show
mm,
me story, and um, the market has obviously some fairly serious skepticism that December was not just a flash in the pan. So we all don't think it was, because we understand the business. And I think their first quarter earnings are going to show that, they are really turning over large profits now. We have seen the ships go down to Brazil. Okay. They
mm,
are operating down there. They are selling gas into Brazil. They are making money. Um, so, we keep watching for when FLNG comes online. I hope to God that that thing is online before earnings. If it's online before earnings, I'm going to make a lot of money. I'll put it that way. And I think a lot of us, who have stayed long in this are going to as well. But look, this thing has rallied hard in the past. I don't see. I made a joke like a couple weeks ago. Like, should I buy $25 NFE puts? And I'm like, that was supposed to be a joke. Like, what the heck is going on here?
now they're almost in the money.
Yeah, they're almost like, yeah, it's like, oh my God. So, there's just one of these days I'm going to learn to invest in just things the market likes.
Like
I'm gonna
Nvidia.
like Nvidia, I'm gonna hold my nose, I'm gonna buy SMC, I'm gonna buy Snap, I'm gonna buy all this other stupid nonsense that, just trades at like a gajillion times revenue. It's not an investment. It's a never gonna pay itself back. Yeah,
Don't.
it's yeah. So it's frustrating, but it is what it is.
So when
Um,
are earnings? When are earnings?
for
The new
if
fortress.
for New Fortress, yes, we are get over to my. And we it's not May 8th, basically.
Maybe 8. Oh, okay.
Yeah,
Yeah.
in the morning.
Maybe time to buy some call options.
So, look, 30s right now for May. You're not far off from there, and I can almost guarantee you that if it's good news, it's probably going to rally on that. But I mean, let's see. I hate this damn thing. I don't hate this damn thing. I just like it's frustrating because it's
It is frustrating. It is frustrating.
there's
I just think again, it comes down to time frame. These things. I mean, once they're set up, as you said, they've got such a monopoly. They're going to be basically immovable, irremovable, and they're just going to clip the ticket on everything that comes
and
through the
it
terminal.
doesn't they can never be like they sell at a premium to JKM in Brazil, okay? Which is Japan natural gas or Japan LNG, basically Japan Korea LNG. So they're always going to make money. I mean, this is sort of like one of those businesses. This is why utilities, why pipelines trade at 20 times revenue or 20 times not 20 times 20 times earnings because they're just immovable objects. And once they're in, and they pretty much have like market dominance. Now, yeah, they're not going to like have the greatest margins on the world, but you know, uh this should not be trading for 5.4 times forward. This is ridiculous, honestly. Um I mean, you can't.
Replacement. What? Let's have an exercise. What do you estimate the replacement cost of this thing?
Oh, it'd be like $6 billion at
Yeah,
least. Um, Probably
that's
closer to
where I
seven or eight.
that's where I like to start before you even think about like inflation value. So market
Sure.
cap trading, market cap 5.5
5.5.
today, and the enterprise value kills you because of the debt. So you got 13 billion.
Yeah. But
Mm.
13 billion might actually be replacement value for all the stuff that they're putting in. I
Exactly,
mean,
because you can't just
honestly,
come up with a cash with this sort of thing in today's
you got
environments. You need to take on
yes,
financing anyway.
pretty much.
Yeah.
I mean, it is a CapEx heavy business. That is what it is. But the terminals are in place. They own the terminals, and um, that's the thing. Like, and these terminals can be hundreds of millions, if not $1 billion, and to come in there and you know you would be the only time that would become economically feasible is if energy is just through the moon and you got people willing to pay for it. So great, they're making a lot of money in that scenario.
Exactly. In that
But
environment, they would be interested. Yeah.
yeah, and there isn't really in Brazil, there isn't a readily available source of gas. Like they don't have something similar to like the Permian there. Before this, never mind the fact that Petrobras, which I've heard is which I've referred as the Rio de or the Rio or San Paulo pronunciation. So I've just now learned recently that there are different pronunciations. So if you live in São Paulo, I believe you're gonna call it Petrobras, and if you live everywhere else, it's Petrobras, and it's just
That's okay. You look like a Sao Paulo kind of guy. I think.
yeah, totally. No, that's where I'd be. Totally. Um, cool
But
place.
anyway,
Yeah.
leading into Petrobras, I'm going to bring up. It was the last time we chatted, I think, was about the news that
The
shocked everyone.
news.
And since we had different news, so if you're following my screen, guys, you'll see
Uh-huh.
this cliff dive, and then around about where we
It's the
bounced
200
off the
day
200-day moving average.
or
Uncle
yeah.
Jimmy and I had a chat to sort out what was going on and what the future might be for Brazil and for Petrobras. It looked like the environmental
Doom.
minister it was going to hold the dividends hostage after the great man CEO Pratesh himself said he was going to stick with the dividend policy, and there was all this kerfuffle. And in the end, what happened, Chappie?
In the end, they're paying the dividend anyway. They just approved it. It's like, oh, it's all just a bunch of soap opera for nothing. And we all knew that they probably were going to pay it because, again, the Brazilian government needs
Yeah,
it.
it did. Exactly.
And so this was all just much ado over nothing. It
And
was,
if you called bluff, you made
yeah.
a
And
lot of
if you
money.
called the bluff and then you bought the dip, then you're doing great. So good on everybody that did that. Um, that was the thing. Like Haddad has was backing Paraches all the way. You had and basically, this was slowly but sure. This is sort of just, you know, Lua wants this, but the thing is that in order to get what Lua wanted, they'd have to change the law. Probably. I think they probably would have to go beyond just changing the bylaws at Petrobras.
So
Um,
he now wants to keep this separate fund. That's what he wants.
there's not even going to be a separate fund.
Good. It should be.
Because, well, they said it basically 100% is going to be paid out. They're going to pay out 50% now, and it's actually going to be paid out now. That was the surprising thing. Like, this is
Is
coming
it?
out. They're paying it in May and June. They're not even
Instead
stretching
of the
this out
whole
to, like,
delay.
yeah.
Yeah.
So, and then the rest is going to be paid out throughout the year as whenever, as when as whatever the financial situation. And they're saying this is because the Brent has gone back up, so they don't need it potentially. Um, you know, okay, whatever. A safe face, something, something.
Exactly. That'll do.
But it's like there was the whole drama as to whether Paraches was going to leave or not. I loved his little joke of like when he is like, is Paraches coming out and is like, yeah, he leaves every day at like 7 p.m. He'll be back in the morning, because it's a full-time job or something like that. It's like, it's just like apparently, so the way that the rumor is somehow that it kind of went down was that Lula was going to he was going to nominate one of the co-founders of the PT party, who is now the chairman of the Brazilian Development Bank. And I think that was the thing is for Silveria, that's a Lula ally, which means he loses even more control of Petrobras. So he has even less influence in that scenario. So he probably capitulated on trying to get Paraches out, and um, and then at
He's a
that
bit of
point,
he's a green goblin, Olivier,
oh,
really.
he's just
And he's going off on his own. Like
he's a ghoul. I mean, he's just like this guy is. I don't know what the hell he's he's also not PT, which is also the other thing. So I mean, I always think I mean, I was always of the mind that you know Lula is going to end up backing Paraches, even though he's probably the most capitalist PT member there is. But he's
but
PT.
he was his appointee in the first place. So
Exactly. And I think the guy from the development bank didn't want the job, but he's also 72. And I think he said what I imagine went down was one, first the unions came out in support of Paraches. And that pretty much sealed the deal because Lula's not going to go against the unions. I mean,
no, no way.
so and even then the unions voted for voted in favor of the dividend.
Because
So it was
everyone
like,
wants the dividend. It's all we want.
because everybody just wants a dividend. It's just like, it's great. It's just, it puts money into the economy. It takes, you're going to get investments out there because look, if Brazil's being more friendly to capital is going to come back in, and capital is going to be coming into Brazil. So
No.
this whole episode was just I think it has diminished the influence of Silveria. I hope. I'm
Hope so.
sure this is not the last that we've heard of that rat thing. Because he looks like a rat. I mean, he does. Okay, he's got the hair,
Yeah.
it's like greased back, and like,
Yeah, he's a green goblin.
he is slimy. It's just very slimy. Exactly. Um, So, I think it's everything is just sort of off to the races here, and you're fine again. You're probably going to be if everything goes the way that's going, you're going to have a price above $20 by the end of the year, without a doubt. Um, it's great, and so they're going to pay out for the rest, of course, the rest of the dividends throughout the year, but as I'm sure that will happen too as well, because it's just going to be as the government needs it for revenue purposes, but
Why
you
fight
know.
the Brazilian government? That's what I say.
Yeah, and I'm sure the guy also the Brazilian development bank, he also went to Lewis like, why are you firing this guy? Like he seems to be doing a great job. Like
He's done a great job.
he's delivered like Petrobras's second best year ever in a lower oil environment. I mean, he's got the refineries, at full capacity, selling, keeping fuel prices low for Brazilians. Like, why are you getting rid of this guy? Because he wants to pay a 50% dividend. Because he basically got a whole bunch of the, I mean, the banks were all in on it. That's the other thing. And I think that's why you saw a lot of banks buying call options, because they knew what was going down. And then there was, it was very, very interesting to me that the banks were not capitulating. And
Show
that
me the
was,
show me the volume on the call options around that time when you and I did our last
oh,
call
it,
chat.
it was a lot.
Yeah. Okay.
There was a lot of people that were calling bullshit on this, and good, they should have, because it was bullshit. Um, and add on to that, you now have confirmation of oil. You really now have confirmation of oil in the equatorial margin. So Petrobras is off to the races here. I mean, this is a company that's got a lot of future ahead of it. Um,
And year to
so
date, Brent is up 16%. Petrobras shares with all the volatility up 9.3%.
mhm.
So
Yeah,
what
I
they
mean,
sell
you've got
has gone up more than the price of the company that sells it.
yeah,
Year to
which is usually not how that works, but
right. Alligator
so
jaw.
yeah. Um, I don't know. It's at this point, congratulations to all the people that held. I mean, this is sort of just a situation as to why you just, why it's sometimes best just not panic. I mean, even if you weren't, even without the extraordinary, this thing was still going to pay a 15% yield anyway, just
Yeah.
off of the regular cash flows. So who cares? I mean, it's just, there are times, frankly, when it's just uh, best to just ignore the price action. Like, look, Petrobras is going to be fine. What you need to set your news alerts for is like an oil spill, like something happens and there's like something like that. That's when you get out. But the thing is that, look, you can once the volatility settles down in this thing again, I mean, you can cover, you can pretty much just um you can rent the dividend through puts. I mean, the dividend itself pays for the puts, at least on the ADRs.
Yeah.
In down there, in the Bovespa, the options adjust for dividends, but up here they don't. So there's
Good man.
ways to play this. If you're worried about it, and again, it's cheap to hedge. So
Yeah, makes sense.
there, so yeah. Other than that, I just
And
ah,
what else are you watching in the oil space? I've seen what looks like my offshore thesis and oil services are getting a bit of a run. Anything else in the whole oil sphere that
I
takes
mean,
your
I'm
fancy?
I'm I'm looking at rig still. I mean, still, it came up to the 200-day there, and it's come down back down to the 50. I think you've got earnings coming up on Monday, so we'll see where that one goes. Um, there's yeah, in the offshore space. I mean, yeah, you've got Waterford. Yeah, I think that's right. Um, the
Weatherford.
Weatherford. Yeah, there we go. Weatherford.
They're onshore, right?
Yeah, and they did report this week, and they've Well, they're just I think they're yeah, I think they might be onshore, but I don't know where they totally are. But they're
But
you know they
I don't.
reported this week and beat expectations and are at pretty much now at all-time highs. So that's cool. Um,
Is that tankers haven't really taken off like I thought they might have. I mean, I'm just looking at Scorpio tankers, my holdings up 35%. This year, DHT seems to be a wide
well,
margin of
tankers
safety.
are there's a lot of environmental regulations, and apparently now
Yeah.
Europe is going to be forcing carbon credits on these people that are coming into the European market because Europe, this is a tax on, this is basically the carbon credit bullshit in Europe. It's total bullshit. What it is basically it's a tax in disguise.
It's of course it
And
is. Someone's got to
it's,
pay deficits, mate.
yeah.
These wars over these
So
deficits.
yeah, so it's not, it has zero to do with carbon. It has everything to do with getting a tax around WTO rules. Um,
And
and
they already had this reform with the scrubbers and the fuel issues, and you had to have this low sulfur, low SO4 things going on, and that mixed everything up. And so they all got new fleets, and Scorpio did their thing with that. Come on.
yeah.
So what, the tankers have got to pay this now, or the oil companies
Oh yeah,
themselves?
yeah,
Or
yeah, of course. The tankers will apparently if this the way that they're going forward with this. That's
motherfuckers. Anyway,
I don't want any European exposure. Okay, I'll just put it that way.
yeah.
No exposure to Europe. I don't want anything to do
It's,
with them in energy markets. Like,
no, it looks like
no,
it
thank
looks
you.
yeah, it looks like I'll be investing in Cuba before I go back
Yeah,
into
there you go.
Jesus.
But beyond
Okay, so
that,
yeah, all right. There's not much. What
I
about
mean,
uranium? Your favorite sector, mate? Uranium.
yeah, I mean,
Go on, talk to us, mate. Talk to us.
I've gotten a tap on the shoulder saying, that the next leg up here is coming soon. If there's going to be a leg up, take that as
Well,
you will.
so
Um,
year to date, we're down 5.8% on the futures,
sure, the futures, but yeah,
which is really that's spot price,
yeah,
which is
yeah.
only 20-ish% of the overall market. What
Mhm.
about the supply gap? And Kazatomprom can't bring their supply online.
I mean, you're still getting a lot of EUP that's coming out of China, and that's been satisfying U.S. reactor demand anyway. Um, and it's look, the thing is that a lot of the Australian equities have taken a little bit of a breather here. I mean, you've got Boss the 200-day. Um,
Yeah, but
if you're
I care about companies that are selling uranium at a good margin and that are making money.
oh well, okay. I would like to show you. I would like you to find me the unicorn because they don't exist. Um, but
I have speculated in the past on the whole global atomic type setup because I get
yeah.
it. There's
Oh,
such a wide
that's another damn stock
that I
that's
get.
hated.
Fine, I get it. But you still got to get the thing out of the ground and actually finish the mine before you start seeing profits. Cameco is up 70% as the bellwether for the index. I know it's just one stock, but the point is it's the one where capital is going to go to first, right?
Sure.
And so uranium, I'm just using the futures, as I said, down nearly 6% year to date. And I guess that might be a little bit unfair. If we go rolling 12 months, it tells a different story. You've got 65% up for uranium, 88% for Cameco.
Hmm.
And what's going to happen now is this drop in the blue line, the uranium
Yeah.
price, going to drag the purple down with it, or is the opposite going to happen?
Well, for Cameco, I mean, they'll do better in that situation where they're having to buy less spot for whatever spot pounds they have to buy. Um, you know, good on them. Um, for Kazatomprom, I mean, yeah, you're gonna have maybe a year or two of supply issues out of there, but you're still gonna get uranium out of the ground. You just may not be able to increase the amount of uranium you get out of the ground, but you're gonna get uranium out of the ground. Um, there's, it's still uranium, the uranium trade is still something that's fueled by a lot of speculation, and
Hmm.
a lot of these equities do remain very, very overpriced. And they're they're really the only thing that isn't overpriced is global, but global is
Well, they've
has
got some
got
other issues.
yeah, as
Yeah.
everyone just loves to remind me about, like, yes, I'm sorry that, you have to have a little bit more of a longer time horizon
Yep.
for global. Like, global is not a trade, all right? You buy the dips on global like this, but it is the only thing out there that is actually going to return on investment something,
Reasonable. Well, there's a
yes.
reason why it's
There's only one stock out here, right? Global is the only stock where I can say future dividends are going to exceed the price that you buy it at today. That's it, you know. And if you have a 5 year
and that
time
might take,
horizon,
yeah, I was just going to say that might take half a
look,
decade.
it could. But look, if global becomes global and global does its global thing and it's able to do its, DASA mine and all that. I mean, this is a $9 stock. So w there's nothing else here that is going to go up like 9x. So this is what you do. You take a
Except
couple
NVIDIA,
th you take a couple $1,000s, all right? You buy global and you just
and you
don't
forget
look
about
at
it.
it. Look, max risk, maybe you lose it all. But you could also turn that into 27,000. And that's just capital appreciation. That's not the dividends and everything else that's going to come out of there. Um, so, yes, I am terribly sorry that I have been totally wrong about global, I guess. I have been wrong in that its price will go is
Wow.
when the price is going to go up, apparently. Like,
Yeah, but when it's
I
a
mean,
fool's
it's
errand.
it's it's in the depths of the Lassonde curve right now. Okay, they have to get funding for the mine. They're going to get eventually get funding for
That's
the mine.
that's what I want to ask you about.
The
So what can they
the
do funding wise to
the
get
look
this?
the government down there has already basically threatened to take the license away from GoviX because they're not developing their deposit. Um,
Ooh,
so well, there's another one. There's GoviX. They have
okay,
a
yeah.
yeah.
We're talking
Uh,
Niger for people.
yeah, we're talking in Niger.
Yeah,
So
popular honeymoon spot with a lot of
yeah.
uranium.
Yes. So there's what I mean, it has the highest grades of uranium in Africa anyway. Um, but it everybody wants to see this mine happen. Okay.
It's in
The
everyone's
government wants
interest.
to, yeah, exactly. So it's going to happen. There are just look, I don't see maybe you buy this now and it perhaps it goes down to $1. I don't know. Okay. But at the same time, like it has there's never been a situation where you've been bag holding something down 40% and because but you believe in it and it's the real deal and this is the real deal. um
Indeed, the size
I,
of the deposit. I mean,
yeah,
goodness.
so look, that's global knows where all that stuff is too. Okay, they can't there's going to be a lot of work that's going to have to be done over again if they were just to seize this. Okay. um, because
If
there's
they
a lot of
seize it,
data.
if they seize it, they don't get any uranium profits though. They don't get
Probably
that nice
not.
royalty. They can't develop it. These are
No, I don't think no, they don't have the expertise to do it. Maybe they could bring in someone else. But
yeah. Who's going to do
I
that if
mean,
they stole it from someone else?
this is like look, it's just a situation where, oh God, they just, they don't want the US military, or they're trying to basically come up with better. I mean, it's all just negotiations here. But the US wants to make this deal happen. I'm sure it will, everything is going to work out here eventually, but your risk to
That's true. They don't
reward
want.
on
Yeah,
global
they don't want
here.
the Russians. They don't
All
want the
right,
Russians.
look at it
And
this way. Look at it this way, okay? This is your where you're at in uranium, okay? You can buy something that is incredibly overpriced on any logical metric of evaluation or analysts or analysis of an operating business and its future profits potential. Pending
you're not talking about.
uranium, pending uranium going to fucking $400. Okay. Third F bomb. Sorry. We're
I've
gonna
heard I've heard I've heard $1,000 a pound is on the cards simply.
what? Oh God. Okay. Okay. I mean
There will, there
at
will be no there
300,
will be no free market self-adjustment. We will get to $1,000 a pound.
I'm sure eventually. I
Well,
mean,
the way you guys are going, printing currency and God
yeah,
knows what,
yeah,
you'll
who
be
knows? Or
anyway.
you can, all right, you can either buy something that's incredibly overvalued, or you can buy something that is not overvalued. I think in both situations, the risk is pretty much the same. Okay. Maybe global goes down 50% from here. CAMECO can do the same damn thing.
Absolutely. Yeah.
And so can Boss, and so can all these other equities. Like once it becomes clear that they're just not going to make the kind of money at all or ever that their speculative price is currently trading at, they will sell down and they will sell down quickly. So if you can say to me, like, if you don't think that all of these equities have 50% downside risk, like tomorrow,
Mhm.
well, we're gonna have to agree to disagree on that one. I'm just saying. Um, and I think, you've got the 50% downside risk in global. Great. You've also got the
But the
nine
discrepancy
times,
between the net present value of
yes.
global.
And you've got nine times upside potential. 10, let's just say 10, basically. It's pretty much 10. 10 times upside potential in a global. Even with potentially with dilution, mind you. Versus, can you really say that about next gen? Can you really say that about Boss? I mean, you think that Boss a
Yeah.
is a I don't know a $30 billion company in the
Can
next
you
five
imagine?
years?
Can you imagine the executive bonus salary if next gen would have fly 10x from here for production?
Yeah, no, sorry, 10x. So they're an 18 billion-dollar Australian company.
Yeah,
You
yeah,
believe
yeah,
that?
yeah. What is now?
Okay,
That's
sure. So I think your risk reward here, if you're going to play uranium, if you want to be in uranium equities, and I'm going to die on this hill, and I'm sorry that this upsets some people, and they love to point it out to me over and over again. Um, it's global. Like you have the same downside potential in global as you do in everything else. You have 10 times upside potential in global. You maybe have 50% at best, frankly. CAMECO is not going to $100. Okay. CAMECO is already CAMECO is a $10 stock at best that is being traded in a mania right now for over 50, almost $50.
yeah.
I mean,
So
this is
let's really flesh this out so people understand. So I'm going to bring up. I will show my screen. Why not?
you
The
are
difference
now.
between. Am I? There you go. I knew that. You got a $22 billion enterprise value for Cameco. It's the
Mm-hmm.
biggest. It's. Are you going to
Look at
get
the
10x? If you're going to, are you going to get 10x on that?
No, you're not.
Verse Global Atomic, you will probably have to suffer some bone rattling volatility along the way. But if you wake up, if you put some money away, you wake up in 10 years, or you come down to Argentina, you go out, you do whatever, and in 10
Mm-hmm.
years you wake up and you look at your account, is it more likely this thing goes to $2.8 billion enterprise value? That just seems a smaller hurdle to overcome when that's roughly, depending on your uranium price, the net present value of the DASA asset.
Pretty much. You're right on the money here. And the best way to look at that. So, and then just start looking at Cameco's cash flows. Like you're trading at how much times forward right now? I mean, okay. This is a declining asset. Um,
Yeah, well, that's the other thing is that don't forget, yeah, declining asset, they've got to source the uranium.
yeah.
Yeah, okay, sure. It is. It's
So you
not easy
go to, yeah,
to
go to,
put
so
up
go to, yeah.
that global have.
Well, you can go to valuation. Valuation is going to give it to you, but it's going to give you the multiple, I guess.
Sure, but
Um,
I'm just looking at what they're pricing in for growth first. So you're expecting, I don't know, from this year onwards, you're still expecting double-digit growth. Um, Depends on their term contracts. I'm not familiar. I have to talk to Justin Hume about that. He'll know. But
yeah.
enterprise value, EBITDA next 12 months, you're looking at you're paying 22 if you believe the analysts' expectations. It's pretty pricey, Chappie. There's a
50,
lot of growth, a lot of growth
53
needed.
times forward free cash flow.
Yeah.
53 times. Or
Well, it's
sorry,
not as much
70.
as it.
Oh,
Yeah.
excuse me. You have yours
No, no, no,
backwards.
no, no.
It's 70.
That's right. That's right. Yeah. I'm from the civilized
What?
world. So you go from left to right. Uh,
I reverse that too.
I
So
know,
it
I know.
depends on whether I'm doing a chart or not. I mean, yeah,
No,
it's
but this is the point. If I didn't tell you which company, I didn't give you the name of this company. I just said, "Hey, Chappie, look at this. What do you think about the valuation of this thing?" You would say to
it's a
me,
meme
"Jesus,"
stock.
you would say to me, "Jesus Christ, Ben, there's a lot of growth needed to justify the current valuation."
Yes. They apparently need to the uranium price needs to double and they need to bring another
Cost,
MacArthur
yeah,
River online.
yeah,
Cost down and they need to bring another MacArthur River online, I don't know, in the next week. That's how you justify Cameco's price. Um but
mm.
but but look, they
Maybe
okay, look,
here's an idea.
here's an idea.
Here's an idea.
Let me put this let's put this up. Okay. You've got how many years of reserves do you have in MacArthur River? You got 20 years there. Overlapping that with another 10 years right now for Cigar Lake. And you're trading at 70 times forward cash flow. 20 years of reserves, 70 times forward cash flow. Please do the math. Does this make any sense at all?
Only if it's a call option on $1,000 uranium.
Yes,
Uh,
that's what you're doing here. That's what this is. If you are, I'm sorry. Everybody just they look. I am the uranium devil, and I am embracing this role because this is fucking bonkers.
yeah, no, it is. It is. I'm a
Fourth F
numbers.
bomb.
No, no, no. This is the least you have done. It's basically PG. The I'm a Benjamin Graham, old school, lazy man. Give me a discount to book, discount to free cash, and I'm happy. And this is neither. But what an idea if I were this, let's say I was Grant Isaac, is he the CEO still of CAMECO? I don't even know anymore.
Yeah, yeah, yeah.
Um,
CFO. Yeah.
why doesn't he put a massive premium on global and then I don't know, buy global, build the mine, get maybe, I don't know, a 5 to 10 bagger, maybe spin it off. Because the Westinghouse acquisition is not going to cover this stuff,
No, it's not.
is it?
Westinghouse. I don't know who hasn't realized this, but Westinghouse makes $100 million a year.
That's
That's it.
it?
Yeah,
That's it?
that's it. That's it. Yeah. The fuel
Wow.
business, yeah, the fuel business is not big business. That's your margin basically. I mean, it maybe 200, but
Jesus Christ.
yeah, they paid a lot for that.
How much did they pay? I forget
About
once.
$4 billion or about. Yeah. I mean, once you count the um I think maybe I think it's pretty much about two. I'd have to go back and look at the deal. It was expensive. It was over two, I know for certain.
But so it was over 2
Um,
billion. So it was 20
yes, they
times.
paid 20 times. I think they pay, let's just say 20 times forward.
Okay.
Yeah, I
Okay.
know. Tell me about it.
But the key word they'll use is synergies. There'll be some
They've
cost
got synergies, maybe an NBA term, and I'm into high, maybe.
synergies.
I
Uh,
did not. I was not in favor of the Westinghouse deal, but
yes, I'm aware of
but
that.
I understand why they did it because they want to get out of the mining business because mining
Yeah, so it's all
sucks.
about synergies
So,
and ESG multiples. So all of a sudden you can trade at 70 times forward free cash, right? I
and the
mean,
problem is that all of those all of those Westinghouse fuel contracts are through 2031. So they're not going to
so you
be able
can't.
to like, yeah, they're going to be no, like they can't just buy this thing and jack up the price on the fuel rods. So that's fun. Why did
So
they buy this? I don't know.
that's what I was going to ask you. I was like, whose idea was this?
Uh, they had a bunch of cash and they needed to do something with it.
Fucking buy
Uh,
Global Atomic, buy a mine, buy some uranium that
I
they're going to need
mean,
right now.
they probably don't need to buy global considering that,
I just meant buy something with what they sell.
well, they've got that deposit up next to Hurricane and they have found something there. They've actually disclosed that they have found something there. And it's quite substantial and it's pretty damn shallow.
Okay.
So, I mean, you're
Cool.
talking about 40% assay uranium. So
Ooh,
cool. I mean, they
okay.
probably don't need global. Um, and they'll be fine, and the thing is that there's always potential future life extensions for Cigar and MacArthur. Um, I mean, they just extended Cigar, you know, he they don't have like a perfect map of all the uranium that's down there. They just sort of have a guess,
Yeah,
basically.
well, every mine, really.
And, so once you start poking holes, as the CEO said, you never know what you're going to find. So, it's, and that was sort of the thing that, kind of popped a hole in that the whole thesis because it's like, oh well, we're just we've found even more stuff. Like, okay, cool, great. Yeah.
Yeah,
Um,
yeah, that's insane. That's insane.
yeah, I know. It's the valuation on CAMECO is insane. It's gotten a little, they make gold miners look cheap. They make and copper miners look cheap, which is saying something. That's a
Yeah,
hard feat to do that. Um,
true.
Particularly copper miners. There's like a cheap copper miner on the planet.
If it comes to when it comes, I've just made a new life rule for myself. When it comes to metals, either give me the actual metal, the bullion, or a royalty company. I don't want any mid. I don't care about anything in the middle. That's just me. I
Yeah,
don't care.
or an explorer or whatever else.
Oh, I'd go to the casino and at least have some fun. Explorer. What about we finish up with a company you like a lot, which I like for different reasons, but I still like it. Archer Daniels Midland.
Oh yeah, ADM.
Mm,
I
what's the
wish this thing
thesis?
was I wish this thing would start getting a bit again. But basically, all right, the thesis here is if you're going into like a stagflationary environment, food is where
Which we,
you really want to be.
I'm I'm
Um,
I'm calling it. That's where we're going to go.
so ADM basically it is a low margin business,
But
but they are also able to um like for Archer Daniels, like they trade. There's two things here that are going for this. First is that if you have an inflationary environment, they're going to see revenue increase, and they always have, they're going to capture a little bit of that extra margin. So even for them, like capturing an extra 100 basis points of gross margin can have dramatic effects on the bottom line. I mean, you could see the bottom line go up by 50%. Um, in addition to that, if you go into if we're headed into a commodities bull market, you can actually overlay ADM in comparison to WTI. This one's interesting. Okay.
ooh,
Whenever that happens, um, it, ADM starts trading for 16 times. It normally trades for 12. It's anywhere between 10 to 12, and then once it falls below 10, that's your buy points, really. We're at 9 times forward here, 9 times and some change forward. Um, but if you were to look
this
at
is yeah, this is
now, you
interesting.
want to you want to add an indicator here for time PE ratio, basically,
I have no
and
idea.
go up to
Uh,
indicators and then just type in P, yeah, or no, P forward slash E, yeah, um, yeah, price
uh-huh.
earnings. There you go, price earnings. And so you just
Mm,
go out here just a little bit, and you'll notice whenever oil starts to
Heading
whenever
backwards
well,
on that?
you got percentages up there, but basically whenever oil's at yeah, so if you were to look at WTI, whenever you go to about $90 oil, this thing starts trading at 16 times forward. So you see that in 2022. You're also you'll see
Yeah.
that again going
Back
back,
in
you
the
know,
last.
it's yeah. And so you know, really whenever you see this, and you need to go back out a few years, I would zoom out even further. So yeah, there's a
Yeah, it's probably.
okay, here we go. This is well, wait a minute. Oh boy.
I just did the maximum, and now I will slowly work my way.
Yeah.
But I didn't realize there was
Well,
such.
I have a better PE ratio here. Let me do this.
Okay,
I
you
can
can
I can do yeah.
I was, but I'm fascinated by that. I didn't realize such a correlation, and now we've seen the alligator jaws open up with WTI leading, so it's at 83.5, let's call it.
Hmm.
ADM sold off. What's the go with the sell-off, and what's the story around the mean reversion back to 16 times earnings?
So if you were to look at um basically the sell-off was the market thinking that this was Enron, which it wasn't. This wasn't even worthy of a restatement. So that's fun. Like it's like they didn't even have to do that. So yeah, yeah. Maybe US oil. There we go. That's maybe what we need to do. Oh, there we go. Okay, cool. Now we got it. Now I can get this all. Okay. So, um, let's see here. Share the screen. Here we go. Okay. So, you're gonna see here on the bottom, you've got US oil, right?
Can't see
Whenever
this.
you see what you don't, oh wait, no, okay, because I didn't say share yet. Okay, there we go. Now we're
Aha,
here.
here
Now
we
we're
go.
here. Okay, so whenever you see like here's your line for because you've got these levels here. So normally you're around here, like 10 to 12 basically, over that period. And then sometimes you see where ADM like sells off. So like we're down here, like you
So
sold
bottom of
off
that
to like the
range,
8.4. Hmm?
8.4.
Yeah.
Yeah.
So
Like,
that's those are good buy points in general for ADM. But look at this here, okay? When you're really entering into like commodity bull market, so you've got from 11 here all the way to 2014, you're seeing ADM, you're seeing these periods here where ADM is trading when you've got these higher oil prices, you see ADM start trading for like 16 times. And that's in particular, if you also overlay corn here, corn is also the other big one. So, well, we can do soybean meal, but let's do okay, what's corn? Oh, Lord, go over here and take a look at agricultural
type
futures.
an inch symbol. Don't use coca, that'll be off the charts.
Oh no, they actually got out of the coca business. They got out of the coca business like 10 years ago because they wanted nothing to do with it. It was like, oh no, thank you. We're good. ZC, okay. Let's do ZC2. Yeah. So, because that's going to average things out. So, you know, there's these periods here where also you're seeing like corn elevated. And so you came into this area, particularly around 11 and 13, and that's where you really saw a lot of appreciation in um, in
Yeah.
ADM. So in other words, you're sort of buying it here right now. But if you go into this commodities bull market, you're going to get up to here to like 16. So like $120 ADM is not out of the realm of possibilities. I mean, even now it pays a 3.2% yield. And that's on the old dividend. That's trailing. They just increased that. So you know, it's this is an area that's people have to always eat, and in an inflationary food environment, in an inflationary environment where oil is going to be higher, let's say, then you know you're going to get to a point where you're going to get an appreciating ADM basically. So like you can come back here and you can go back to like one of the more interesting things is to go
They
back
also own
to.
they have quite a large land holding, if I'm not mistaken. Reading
Um,
reading some of the work Murray Stahl and Jim Davalos have done, it's one of their holdings. I believe they had like a timber processing at some point, and they had the land and they had the timber. I could be wrong.
yeah. I mean,
Yeah,
so we have a fairly similar story here. I mean, look, you've got if you think we're going into the 70s again, okay?
we are, Chap.
Um,
Yeah,
look, here we are, okay? So let's just now this is dividend adjusted, keep in mind. So this is the dividend adjusted chart. This is not the dividend reinvested. I don't think they have a chart for that. But look, you just had a big sell-off here. You're buying the bottom. 10 years later, 950% return. And they just bought a
that's
massive
just the equity. That's
and
just the
they just
equity.
yeah. Well, this is the equity, this is dividend adjusted equity. So they're going to
Ah,
take out the dividends that you
okay.
receive because this thing has paid a dividend every quarter for like 100 years. Um, they've been around a very long time. But I mean, yeah, so a decade later in January 1980, you were up 930%, 950%. And if you had reinvested the dividends, you'd be up even higher. That beats Exxon, by the by. That beats IBM. That beats a lot of this is a company that has been around for a very long time, and you everyone is just generally if you can nail the bottoms here and you buy these bottoms around these points. If you have a longer time, if you have a couple year time horizon, I mean, you're just gonna get substantial returns here. I mean, 300% from '08 to 14. I mean, these are not bad. That's market beating, okay?
Absolutely.
Um,
Especially,
so
and so in comparison to oil equities in a stagflationary environments, where would you rank?
you'd want both, but
Yeah,
food, particularly food, just ADM is a company that you know, without a doubt, is going to be is going to be there for a long time, and people have to eat. Um, and they have a fairly good balance sheet. Um, the big question there, just so everybody's kind of looking around, because ADM I think is still a buy. It's fallen off a little bit here, but that's just sort of retesting. I think it's coming up on earnings. It's got to have another earnings call here to sort of, shall we say, make the market a little bit happy, that everything is still fine.
yeah. So that
But
leads me to my next question. If this is so good, why did it sell off so sharply so recently that
oh
caused
well,
to have a look at
so
it?
they basically had to disclose that they were improperly accounting for intercompany sales to basically make the nutrition business look better because it was
Uh-oh.
tied to executive compensation. Now
Oh,
on the
that would never happen.
consolid Oh yeah, totally never happens. Um, now on the consolidated statements, it didn't do anything, right? There was no restatement that was required, but at the same time, you know, so the CFO is leaving, but he's leaving in September, so it's a ceremonial goodbye, basically. So not a huge deal there. Um,
So what did they actually do? Did they just like move invoices around, move sales units around to make things look better in one particular department?
you would
Yeah.
basically make intersegment sales cheaper for the nutrition business. So you're selling product to the nutrition segment at a lower price than what
Make that
was market,
segment.
that basically what was market. So you're making the nutrition segment look better, basically. Because it was intercompany sales.
Yeah.
Um,
You can play that whole
so
too.
yeah, it ends up really being a nothing burger. Now, to be fair, I didn't really go long this thing until I found out they were releasing a 10K. And if you're releasing a 10K, that means you're fine. Because you don't want to restate one of those. So any restatements that they were going to have to potentially do was there. Um, so at this point, it's just a matter of, the market probably wants an update from the company, and they're going to get that in the next. And we're getting an earnings coming up here soon. I remain very confident and very bullish on this. It's not going to move very hard, but it's going to just sort of have a gradual, slow rally over time. And the great thing is that the IV is cheap, so you can
Buy
just
some
buy
options.
some, yeah, just buy some options, honestly. And I hold equity and I hold future options. Should in the future I wish to add to my position, God forbid, amazing. I'm actually using options for the purpose of an option. Um, I know this is what? This is no options are for gambling, Chapman only. Rebel, rebel,
Yeah.
rebel. So whatever. Um,
Or selling insurance. Or selling insurance.
or yes, or yeah,
Give me those.
or hedging or hedging when you somehow bought Tesla at like $17 and for some reason you're still holding it.
Holding it. Yeah. It
What a
means it means you've forgotten the password to your trading account. Let's be
Yeah,
honest.
if you're still holding Tesla, you're either uh you either want to dream of satisfying Elon sexually or or for some reason, you think that cameras are going to somehow be able to drive cars. Like, okay. Um, I don't know about you, but any other application that we ever have had, like a plane that a plane does not use autopilot because of cameras. Ships do not use autopilots because of cameras. Cars will
What about
not use autopilots because of cameras.
what about the
Uh,
boats in in Baltimore at the terminal? Do they use cameras or
so that's an interesting. No, they didn't,
any?
but
Any?
but that's an interesting thing. So when you are
The
taking one of
point
these,
is, cars are not
yeah,
going to run on cameras.
yes, that's true. But that contrary to some people who like to think that that was a conspiracy theory, like look, if something's going to break on a boat, it's going to break when they're leaving harbor because they're spinning everything back up. And if something is going to break, then that's when it's going to happen. Um, because, once you're all spinning and spinning, you're fine. You're probably nothing's going to, unless you're running everything too hard. But when
I
you're,
haven't.
when you're going from like nothing to go, like, yeah, that's when stuff happens. So,
Mm.
and you could also say this was a container ship. Container rates have come down. Maintenance is perhaps getting deferred to keep profits up. Mm, you know.
Be plenty of maintenance now.
Oh yeah, the ship is still there. It's crazy. I mean, and you can go and look at the harbor here. Oh, sheesh, let's go over to marine traffic. Um, the ship is still there, but and so just to show everybody real quick, just to wrap this up and back to the coal conversation. Um, so yeah, let's see here. Just one final little sharing of the screen here. So we're in the Baltimore now, right? So here's our ship, the the infamous, oh, that's the Quincy Bridge. The infamous Dolly. Still stuck there, and so you got all these little work boats around there and tugs and everything else, just trying to clean all this stuff up and everything else. Um, but we come over here and this is where Consol's coal terminal is. Now there's another coal terminal over here. I don't know. I don't think they own that one. But that one's
It's not
that
going to matter if the traffic can't clear.
yeah. So, you got to get through this. And good luck. Um, so, your other option there, of course, is to rail everything down to Norfolk. Um,
Yeah, so how far
which
away is that for
it's not
those of
it's
us?
not that far. But you come down here to Norfolk and then this is your other coal terminal. So,
Okay.
um, and you've got these boats that are being loaded here. I mean, look, the max draft on this, 13. Another one here, max draft, 14. So they're doing like a 30, I think it's 35 feet at most. So, you know, Yeah, that's 35 feet is, I believe,
It's
I
big.
yeah, it's you're not going to be able to fully load these. So, there's that part. And that's going to cause lower profits. So it's a question of whether even the bulkers even want to go to Baltimore. They're probably
Yeah.
not. So you're gonna have to do a discount there. So it's just like, and in the meantime, this is all a lot of property taxes.
Oh, yeah,
City of
that's
is still gonna have to be paying that.
oh,
So yeah,
that hurts.
they do report on May 7th, but yeah, and so that one I'm playing a bit more longer term. I've got something in I have some puts out until like September. So we'll see how that goes. Um, but their mines are over here in Pittsburgh, around this area here. God, where are they? They're somewhere around here. Yeah, no, no, no. Okay, yeah, Warrington now. Anyway,
Anyway,
um,
it's 3 minutes to market close. Mentioned puts. I'm I'm pretty down put about Seagate. I think we should take a barge and run it through the Seagate office. What's it going to take? What's it going to take for people to look at this and say, "You guys,
um, so the hammer thing got delayed again. They are still not making any money. They rated accounts receivable for $150 million this time around, which is more than they had even last quarter, which was amazing. Um, they're running out of, and of course they didn't pay their vendors because accounts payable actually went up because of course it
mm,
did. But
well,
hey, it's free cash flow.
oh my,
Um,
yeah."
yeah, it's
Well, I guess in the reporting quarter,
look, this is how you play Seagate, all right? You take $300 every quarter and you buy something that's maybe like 15% out of the money. Those will be really cheap. And if they cut the dividend, the stock will be down by, 30% in a week. So you'll make lots of money, but don't do anything beyond that.
yes,
Um,
it's not what I did, but
yeah.
it's good. It's a good thought. I notice all of a sudden the analysts are much more bullish about this company. It was some ridiculous amount, like 80 times forward free cash, and now it's come down to 17. So obviously, somewhat the street targets median is $100. Um, and so someone expects this thing to grow and sell more
I-
stuff.
Okay. I mean, I just
I'm just looking, these are not my numbers, these are the analysts.
long term, it's happening soon.
Here's
But
what's going to happen according to the analysts. According to the analysts, a net income normalized of 40 million last year it's going to be reported 190 million this year. And wait for it, next year, they're going to report $1.2 billion of net income, a slight year-on-year percentage change of
wait, what?
536.8%. This is
Oh boy.
this is
I
this
had the
um,
closing bell in my ear. But yes,
Seagate
I heard some of that.
net
Um,
income. Take a look, Chappie. This is apparently going to happen in 2025.
what?
It's
Wait,
a slight jump.
what's the revenue here?
The revenue is going to grow at 7.2%, but don't worry because the net income is going to be a five bagger in less than 2 years.
Uh-huh. Okay. That's and
Yeah, normalized. But if we go to Gap, it's only going to be like
see
it's only going to be a 15 bagger from a negative position 2 years
see
to
they have to do that because if they don't, then the company's a zero. Because there's just too much debt here. They are gonna
but
eventually run out of.
this is the analyst estimates, right? Like who's putting this crap on this? Who's putting these numbers on this crap?
I really don't know. I think this is that's a
Would you like to see their
how?
estimate? Would you like to see their estimate for cash from operations in 2025? It's going to be 1.3 billion.
Huh?
Um,
Wait a minute. You're gonna have 1.3 billion cash from operations and you're gonna have higher net. Okay. I mean, I
yeah.
guess if you'd say,
But this annoys me because even 190 million net income, and then you go, oh, but wait a minute, if you look at the net income gap, negative 68 million. But again,
Yep.
don't worry because a year later it's going to magically jump up by 1,544%
Okay.
to
So just
900.
just just a question for everyone here. Okay. Let's go over to the balance sheet here real quick.
Let's have a look
Yeah.
at the balance
Yeah,
sheet.
let's just go to the balance sheet. I want everybody to see this number here. Okay. So they have accounts payable.
Quarterlies or you want the
Yeah,
annual?
it doesn't matter.
Doesn't
So you got
matter.
accounts payable right now of 1.672 $1.672 billion. Okay, cool. Now let's go over to now if accounts payable is going down, then cash from operations is going down. So let's go to the cash flow statement here.
Let's have a
Um,
look.
so they're going to wait. They're gonna have net income of like what 1.3
That's
and
2025 apparently.
in
But yeah,
2025. Okay, they're gonna have 1.3 in 2025, but they're not gonna have anything like whatever in 2024. 1.3 2025. And we're apparently not going to pay the vendors for the next 2 years. Like this is the thesis, and we're going to have what was the operating cash flow number?
it
1.3
was
billion.
1.3 estimated for 2025. Your cash from operations last 12 months, just for context, guys, 700.
Yep, and that's the only way they could afford to pay the dividend because that's just them rating the balance sheet and the cash going
And not
straight
paying
out.
vendors. So, if they might actually pull this off, they might say, fuck you, vendors, we ain't paying. But we will pay
Yeah,
ourselves.
and the vendors are gonna then, not sell them any more product, and then they're
They're not
not gonna be able
selling
to sell
product.
anything.
They're not selling product anyway.
Exactly. But eventually the vendors are gonna take them to court. But yeah, Jesus, this is just one of those things where it's like, look, bankruptcies, it's a zero. This thing is going bankrupt. I mean, you could look at
Yeah, but
you
it
could,
needs to go bankrupt before I go bankrupt buying buying specky puts on the thing.
I mean, if you're gonna play this, you got to play a little bit of upside to it too. So if it looks like it's getting retarded, then you buy calls or you go long or do something like that. But again, this is just, huh? I mean, keep in mind, they've already dropped AR down. So let's just assume AR starts coming back up. That's also making cash flow from operations go down, because you're getting less cash in. Um, cool. So, maybe their inventory goes to zero. I don't know. I mean, sheesh. Um, yeah, I mean, look, they're gonna prop that thing up until it's pretty much they're on the steps of the bankruptcy court.
Yeah, until they literally don't have anything
Yeah.
left in the
Yeah, and they're getting
or
close.
any more vendors to steal from.
Yeah, exactly. Because I mean they have to keep a certain liquidity ratio anyway, and there's
Yeah, but how many times have they violated that? And they amended the
exactly, and they
agreement. We're
always
up to the
they
11th
amend it, and
amendment.
it's yeah.
They got more amendments than the
So
Constitution of the United States, this fucking company. I mean,
yeah, pretty much. Yeah, they're getting there. Um, so yeah, it's that thing is just what the hell. But you know what? You could just buy Google, okay? You could buy Google, and Google declares a 20 cent, I guess it's a quarterly dividend, and it goes up for in the value after hours, the equivalent of 2.3 whole Petrobrasses. $230
Yep.
billion fucking dollars. Fifth F bomb. Okay. Okay. Um,
What are we
what?
doing?
I
What are we
don't
doing?
know. I really don't know. Okay. This is a
That makes me angry. I'm not gonna lie.
it,
I'm not a
it's I get it. They're pulling the whole meta thing, you know, like, oh yeah, we're gonna declare a dividend, and then all of a sudden, uh, huh? People want a de minimis dividend. I don't. It's like, yeah, I'm gonna buy them because they're paying a 20-cent dividend. I mean, Jesus, like who is managing this? Who is managing the capital that is buying this bear? Is buying
it's
this piece of
passive
shit?
flows. It has to be passive ETF flows.
I mean, it's not like
There's
somebody's like,
no
oh, a dividend declared, buy it. Oh God, like I don't get it.
Petrobras declared its dividends still alive. Buy it. Anyway.
So yes,
Well,
that's
my
fun.
friend,
It's fun. Anyway,
it's fun. Fun times. I think this is a
yeah,
good one. Put it out. Ladies and gentlemen, remember nothing is advice and
absolutely nothing.
don't show your kids inappropriate language left, right, and center. But at Proven Reserves on Twitter and Substack, Chappie puts out great content. Links will be in the description. We wish you all a wonderful Friday evening here I'm in South America, Chappie's in North, and we'll be back with another episode of the ROI channel. Take care.